Hello everyone, this is my first video in my trading journey where I'll show you a trade that could have done better. This is the view. I'm trading for about like 2 years. My English is bad because I'm not a native English speaker, but I hope you'll understand me. Let's talk about the buys in the morning. When I woke up, that was a little bit too late, and I hate when I wake like too late. I saw this market had a rally down because Israeli news, and that's something interesting. Here it was a moment where I was waiting for a trade, but my my strategy wasn't met, like the minimum requirements, and I didn't enter it simply. You need to follow your bias, not just adjust your trade for every instance. I mean, based on ICT concepts. And it's looking like this. Here we have equal highs. And I'm just waiting for liquidity grab to continue lower. I do like something like this, and usually there should be and could be something like this. This is the bear fair value gap. I don't know what time frame. It's better to be a bigger one, and inside the bear fair value gap to have another structure here. OT or some at least equilibrium. After these types of moves, it's expected for the price to reach for the equilibrium, at least, like it happened here. Look, 0.5 met. There was the reaction, and I was firstly I was waiting for a short, but again the market didn't show opportunity for this. I was waiting for displacement through the changing state, like here, right here, with the displacement, of course, and I was waiting for the reaction, for the rebalance, because you don't enter on a trade without a rebalance. But he did not meet this type of these requirements. Also, scale down. I was waiting for not this range, the latest range, this range. I was waiting for the equilibrium of the range after getting past the sell side liquidity. After getting the level from away from these levels, also being in a bull for 15 minutes, I think it was this fair value gap, you expect at least to bounce back. I mean, if the market doesn't bounce back, you can enter, but it's more probable that the trade will win if you enter at the rebalance. Here, after getting past these levels, I just did not enter, but you could enter after this, because when you can enter bullish, I mean, when so much disrespect and you are in a bull fair value gap, you can easily enter in the trade thinking it will go up, but do not be too shady. Trade, I think, will only go at the next high, not more than next high. I mean, you should place your lows logically and think like that. But if the price already rebalanced and displaced of these levels, why would it enter again in this area? And that's how you get your stop loss logic. Okay, that's one trade. And the second one, after ignoring all the bear things, all the bear confluence that could be a bias but ended up to not be, and to not respect again, this was the OT, a bull OT of this range, which was not respected. price end up displacing through this bare fair value gap with displacement. It's also important. The reaction inside the fair value gap, and it bounces right back after as inverse. So it's no more a bare fair value gap. It's a 15-minute inverse bare fair value gap. That's how I like to name them, and that's my logic behind the scenes. After that, market was kinda sluggish here. No rebalances that much, no displacive moves to the down or up or the upside. Market was just chill. Price came back from this range to this range. This is the OT. Like this, see? And it's a bull one. A bull one that I was thinking that price after that move, but it was shortly that the price will go to the high. I was thinking for a scalp, and when I saw this displacement, I entered in the trade, but my fill got so bad. I mean, like 50 points below the fill, 50 points, and my outer fill was also bad because I knew I was counter trend, but I just wanna make a scalp on my on the strategy. OT here, and look, I got out with like 30 cents, and this is also small for me. Okay, and a good trade for me, it's like 300 pips with nicely RR. I don't like to risk a lot. I like my entrances to be exact and strategic. I mean, 90 cents or 100 points is the maximum risk that we'll put into a trade. But market was kind of in some garbage conditions lately, at least for GPB, JPY that I trade consistently. But I was aware of this trade, and I like that because I got out before I was on the loss, and I got out because I knew that there was an OT, and the reaction to the OT was my point to exit. This was a point. Not this. This candle. This candle was my reaction, because when you see this candle, it's almost clear that price will reverse. I think price even respected consecutive encroachment. No, it's the OT of the inner candle. After that I just exited again with a bad feel. Now I'll wait for what comes into the Monday on a bigger time frame of what is our bias. We took some important highs after the Iran war, or that, I don't know what it was, and know that it was about Iran. It was not shown on Forex Factory also. Price took a BSL, got the standard things ongoing. Let's see if versus 05 from here. This plays down. We still have this fair value gap that could be a rebalance point. We have some SS, we have some sell side liquidity here. And my strategy is based off displacement, change in the state, and some rebalance. These are the conditions, minimum condition to enter in a position. If you don't have this, you just simply don't enter on anything. Now it's just a waiting game. where it goes from these levels on the bigger time frame. Here, bearish reversal lately, Thursday and Friday. After breaking these points, I thought market will go more bearish, like at least for a few days. And this is my first video of trading.